Volatility and risk aversion remained high in September as the Eurozone sovereign crisis continued to play out and investors remained concerned about weaker global growth. Commodities were the biggest loser during the month as all sectors, bar livestock, traded lower. Even gold, the ultimate safe haven, gave back some of the gains made in August, where it traded at a record high. Equity markets also made losses. However, core government bonds, particularly German, continued to make solid gains. The yield on the 10-year government bond in Germany fell to a record low level of 1.65%. Spanish and Italian government bonds remained volatile and continued to make losses, although the ECB continued to buy, which stemmed some of these losses. Irish government bonds continued to make gains as sentiment continued to improve towards the region. Contagion effects have spread from the sovereign bond markets into the banking sector in September. Markets are particularly concerned that banks who hold government bonds will need to be recapitalised if there is to be losses from these government bonds. French banks in particular are exposed to Greek government bonds and hence were much weaker in September. The lack of policy response to the euro crisis has raised concerns that there will be a disorderly restructuring of Greek government debt. As a result, the euro has fallen, particularly against the dollar and the pound. However, we believe that the policymakers are committed to the euro and that the cost of a disorderly restructuring would be too great and hence will come up with a policy response. The ECB has continued purchasing bonds in markets that are affected, particularly Italy, Spain, Greece and Portugal. Since August, it has purchased more than 70 billion worth of these bonds. Elsewhere, the ECB is also providing liquidity to the banking sector. 5 central banks around the world have also agreed this month to provide dollar funding to the Eurozone banks, as they are finding it particularly difficult and more expensive to raise money in the wholesale funding markets. Elsewhere, the ESFF programme, which was agreed again in July, is being ratified by countries around the world. 3 governments have yet to do this. However, we expect this to be fully ratified by the end of October. We believe that volatility will remain high in October. Markets are dissatisfied with the policy response to date to the Eurozone crisis, and a lot of uncertainty continues. In September, it has been suggested that the size of the ESFF fund could be increased again. However, there is no political consensus to do this. On a positive note, there has been tentative signs of a stabilisation in the economic data in the US, which could provide some support for markets.